Supermicro is an interesting company that's taken investors on a roller coaster ride over the previous year and a half or so. The company's revenue and sales are soaring as demand for artificial intelligence is creating a surge in demand for supermicrocomputers solutions for data centers optimized for artificial intelligence. On the downside, the company's management has failed to deliver transparent financial statements and has gotten into a lot of difficulty surrounding the transparency and the reporting of their financial statements. All of that has created volatility in the share price, and investors are optimistic about the company's longer-term prospects, but are curious about the reliability of the management team and their financial reports. All that being said, I'm going to review the company, share with you their revenue growth, and show you just how explosive the revenue growth has been and will likely continue to be. And then look at valuation and share with you how I'm approaching a company with this kind of question mark surrounding their financial statements and their reporting practices, and how I deal with these kinds of situations, because it's not only Supermicro that's faced these kinds of question marks. It happens to companies every so often, and I have a strategy I apply when I'm dealing with this kind of situation. So let's take a look, and I'll share with you these details here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's look at the revenue growth chart and look at that explosion here in 2022. Revenue was growing steadily from 2017 to 2022, from 2.5 billion up to 5.2 billion, and then absolutely exploded on the back of that rising effectiveness of AI, on the back of ChatGPT, and increased from 5.2 billion all the way up to 22 billion in the most recent trailing 12-month period. Demand for data centers optimized for AI is soaring, and demand for liquid cooling is increasing as well, and that's Supermicro's specialty. These data centers optimized for AI require a lot of power. When you're using a lot of power, there's a lot of overheating that goes on, and these systems were previously, and still some systems are air cooled and others are liquid cooled, and it looks like liquid cooling is the industry preference right now for these data centers optimized for AI, and that's where a Supermicro specializes. One of the downsides for this industry is it's not very lucrative for companies like Supermicro, Dell Technologies, Hewlett-Packard Enterprises. These companies that are serving this industry in the position that they're serving are not very profitable. Profit margins are not very high. The highest it got over the previous decade for Supermicro was 10.7% at the height of its demand, and it's falling ever since then. It's now back down to 5.7%. These companies are never going to be extremely profitable. They don't command that kind of value in the supply chain, and so their margins are always around 10% at the highest, or I shouldn't say at the highest, but around 10% for some companies, higher single digits for others. It's not reasonable to expect Supermicro operating profit margins will ever go above 15%. The returns on invested capital did increase all the way up to 29.7% at one point for Supermicro, but have come back down to 15.8%. I think it's reasonable to assume their returns on invested capital over a 5 to 10 year period can average double digits, around 15 to 18%, and in some periods rise above that, and in other periods fall below. It'll be interesting to see in the longer term what the replacement demand and what the maintenance and services industry can support in terms of the data centers that are now being built optimized for AI. So now that we looked at the company's performance metrics, let's look at valuation and how I'm approaching valuation for Supermicro specifically. So I updated my intrinsic value per share calculation today, and it increased to $51. Previously, I had calculated an intrinsic value around $45 a share. So today's update increased the intrinsic value per share. And the current market price is at 45. So I would say this stock is fairly valued when I apply a margin of safety. And I mentioned in the beginning of the video, with companies that are facing this kind of financial reporting risk, financial transparency risk, quality of financial reports risk, I apply a larger margin of safety. So in most cases, a business with, an intrinsic value that's above 10% of the current market price, I would say it's undervalued, slightly undervalued. But in this case, in Supermicro's case, I would call it fairly valued because I'm going to apply a larger margin of safety here. I don't think I would call Supermicro undervalued until the share price is maybe 15% or 20% below the intrinsic value calculation because of those financial reporting risks, because of the risks of the financial transparency, because I'm a lot more uncertain about my estimates that go into this model, right? There's already a lot of uncertainty about making projections about the future and making forecasts about future free cash flow going out several years. And then when you add to that uncertainty the fact that you don't know for sure about the company's reported financial numbers and the way they're reporting their figures, it adds, it multiplies that effect. So that's how I approach these situations. I take my usual 5 to 10% margin of safety and I expand that to a larger margin of safety. In this case, it would be a 10% minimum, 10 to 20%, I would say, margin of safety in these situations. So I would expand that to deal with the current situation. And so I would say the stock looks fairly valued when measured by my DCF valuation framework. But as you know, I also like to look at valuation on a forward price to earnings basis. And again, I would approach it the same way. So at a forward price to earnings of 17, this stock looks, I would say, fairly valued again. Uh, if you recall, before Supermicro Computer experienced this boom in demand for its products and services as it relates to artificial intelligence, this stock regularly traded at a forward price to earnings between 10 and 12, right? It never traded at a premium valuation because it's not a very attractive industry, low profit margins, very capital intensive, a lot of working capital needed, as evidenced by the company's actual negative free cash flow when sales boomed because it had to spend so much money on inventory before it got money from its customers when it was supplying the product. So not a very attractive industry. And so the businesses in this industry don't trade at premium valuations. So at 17, it's above where it used to trade at before the AI boom. So I would apply a reasonable premium to the valuation compared to its historical average because it's now operating in an industry with much faster growth. But the structure of the industry hasn't changed all that much in favor of companies like Supermicro. So the low margins persist and the working capital situation persists. And so I would say at a forward PE of 17, again, fairly valued, not undervalued at these valuations. So I've had Supermicro Computer stock rated as a hold since August 6th. This is a stock where I've changed the buy, hold, or sell rating several times in the previous year because of the volatility, because of the information that comes out about its financial statements, about the investigation from the Securities and Exchange Commission, about the delays in reporting their financial statements. Remember, they were behind in reporting their financial statements. So all of that has necessitated a lot of updates to this recommendation. But in today's update, I'm keeping it rated as a hold because the stock looks fairly valued. And usually when I'm looking at a fairly valued business, I'll rate it as a buy if I think the business is an excellent business or a Hall of Fame business. Companies like Visa or MasterCard or Alphabet or Microsoft. If I can get those kinds of companies at a fair value, I think it's a buy. But Supermicro hasn't earned that kind of reputation as an excellent business just yet. So at a fair value, given all the question marks, I keep this stock rated as a hold. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.